Straight to the top story that came in last evening. The Reserve Bank of India has announced an interim dividend of around 28,000 crore rupees to the government after the post-budget meeting with the Finance Minister. Now, this transfer is for half the year ended December 31st, 2018. The total surplus transfer to the government now stands at around 68,000 crore rupees for 2018-2019. This is the highest dividend ever paid by the Reserve Bank of India to the government. Sapna Das joins us with all those details. Sapna, over to you.
Clearly, this was a demand by the central government in terms of the interim surplus amount, 28,000 crores. The total target that they were looking for FY19 is 68,000 crores, out of which 40 obviously had been given earlier. And the remaining interim surplus has now come in. This 28,000 crores should be adjusted again by Reserve Bank of India when they close their accounts next year. So this practice of interim, transfer of interim dividends or interim surplus by RBI has started. This is the second successive year. But having said that, the point to watch out for would be the Jalan Committee recommendations, which are due sometime in April. That will suggest a new ECF formula. So will the practice of interim dividends continue from RBI post that as well? As of now, what we are given to understand is that FY20, the government has factored in 68 to 69 odd thousand crores as total dividend from RBI.
Okay, thanks so much for that, Sapna. Well, Lata Venkatesh is here with more on the Reserve Bank of India's dividend. Lata, the 68,000 crore rupees for FY19, what do you make of it? And how will the bond markets react to this piece of news?
The dividend of 28,000 crores is entirely on expected lines after CNBC TV itself broke that story on February 5th. And since then, it has been repeated ad nauseum. So no shocks at all to the market. The math is as follows. In the Rajan years, that is pre-demonetization, on an average, Reserve Bank surplus was between 60 and 65,000 crores. That is the dividend it was giving. Demo year and the year after, the dividend reduced. In demonetization year, it was obviously because the Reserve Bank had to print money and it had to absorb a lot of liquidity by paying an interest of 5.75%, and therefore the dividend was less. This being a normal year, one should expect a dividend of about 65,000 crores. The Reserve Bank has already given 40,000 crore as final dividend last year. That was given in July. So to that 40,000 crore, if you add this interim of 28, it is coming to 68,000 crore. So it would look like a normal dividend. There are critics who say that the interim dividend is last year was 10,000 crore, this time 28,000 crore. So the government is arm twisting more from the Reserve Bank. But really, if you do the math, it is entirely on previous lines. It's only a little bit more than the previous average. We have to see the dividend next year. The government has estimated in the budget 83,000 crores, almost 82,900 crore. So it is obviously factoring in something from the Bimal Jalan Committee. But as of now, there is no surprise in this dividend. Last year's FY18, FY17 dividend has not been handed over by the Reserve Bank. So really, this is a no surprises news.
I believe this surplus is coming only from realized accounts, not unrealized reserves. So if the realized profit and they are following the pattern of last year and the paying year, and after the board is satisfied, I think technically it is there is no issue. But the major issue which is we are waiting for Jalan Committee report. In case Jalan Committee identifies there is some excess which is sitting and it has to be distributed, it has to be kept in a dividend distribution pool, which should be used for smoothing the flow to the government over the years, not in 1 year.
There are two elements of arm twisting here. One is the money is not due right now. The money would have been due actually in August when the regular dividend is paid. So both last year as well as this year, effectively there's been an advance paid by the RBI, which is kind of unprecedented and hasn't been seen in the past. Now, two is, I think, in the Urjit Patel years, for 2 years in a row, we actually saw the RBI holding back some of their retained earnings and embellishing their contingency fund, I think by 13,000 and 14,000 crores respectively. In a sense, that money has been taken back.
Well, time to slip into a short break. Up next, JP Infra's resolution process continues. Stay tuned. We'll be back with updates on that news.